What is going on, everyone? It is your boy, the Master of Coin, and I'm really excited to share with you guys the insight into my trading week, from the wins to the losses, so that you guys know exactly the reality of being a full-time trader. How we navigate the week, how we organize ourselves the week, and how we actually deal with losses, how we deal with winners, and basically how we can do everything to consistently generate a full-time income from the hardest financial markets in the world. So I'm going to show you guys the exact way to think about trading, and then we're going to get into an exact review of the trades that I've taken, because we took 4 positions last week. We took 2 winners, 2 losses, but totaled out over 15R, which means 15 unit of risk. So 1R is 1 unit of risk, but we managed to close out with over 15R from last trading week, only winning half of the trades we took. So with no further ado, let's get into it. So the first thing I like to do is always check fundamentals, because when I look at fundamentals, this is what gives me my bias, whether I want to buy or sell without even needing to open the technical chart. So looking at the Canadian dollar last week, the main theme for me was a bearish Canadian dollar, which means that pairs which I'm trading, which is USD CAD, would be bullish. So by diving into things like the labor market, diving into things like the monetary policy, this is what is able to give me that bias. So when I was looking at USD CAD, I was already bullish based on the fundamentals. So now when I did my top-down analysis, well, what could I see? Well, clearly we're in a bullish market cycle. We're seeing the market continue to show us signs of reaccumulation, and ultimately this was the last leg we was in, because we had our last unmitigated reaccumulation that created a new high. From there, I wanted to see if price could come back to mitigate, which we did, and show us evidence of bias show up. And we did. We saw a lower time frame accumulation. So upon there, right, I wanted to see what could price do. We managed to break some minor supply, come up, generate some liquidity, and then come back down to mitigate this demand zone. So at that point, I was wanting to basically go in on a lower time frame and investigate if buyers were actually there. So when price comes into it, all I'm going to do is zoom in, right, when it comes to my demand zone, which is my accumulation. I want to zoom in to the lower time frame to see proof if buyers are actually showing up in the market. So if we drop down to a lower time frame, what can we see? We can see our price cycle start to manifest. We can see our accumulation over here. Now, why is this important? Because remember, when we see an accumulation, it's an exchange. We're seeing the fact that sellers are turning into buyers. So when I saw this, right, I saw this manifestation, I saw my accumulation, that showed me that, okay, evidence that buyers are actually in control of this market. And that confirmed with my fundamental bias that I was looking to buy USD CAD. Now, from there, it was just a case of, well, can I trade the market cycle? And where I was on Monday, right, there was 2 real ideas for me to get into. It was either price can come back, right, to mitigate out of this accumulation, or I want to see this confirm as a reaccumulation, because it's already manipulated the lows. Now I just need to sign a strength to follow through to confirm the buyers were there. So at this point, all I did was I had an alert sitting down here, and I had an alert sitting up here to either confirm that accumulation or come down to mitigate. And then from there, it was a case of just not even trading. And this was what happened on Monday. So on Monday, when I saw this, right, there was nothing for me to even take a trade. And when I understood it, like daily ranges and how many pips these pairs move, I'm already thinking that this entry is not going to happen today. For price to go create a new high, come back, mitigate, and give a lower time frame entry, and it's a Monday, which is a very low volume trading day, it was likely that this setup wasn't going to come today. So that meant on Monday, I wasn't really looking to be on the charts. So basically what I did was, obviously for my community, I was preparing them, I was doing other chart work, working on my journal, and just doing other stuff, right? So all I did, like I said, was set the alert on the high and set the alert at the demand zone and just simply waited. There was nothing else for me to do at this point, right, apart from wait. Now, once my alert went off, right, this is what confirmed this price action as my reaccumulation. So what I wanted to do now is come in and measure out this manipulation. And what I did like about this as well was that this was NFP, right? And it was like, well, why are the sellers from NFP failing to do anything? And this is what you have to, like, when I trade, I always like to ask questions and dive a little bit deeper. If the sellers from NFP, right, what did they do? They just came down into minor demand. We show our volume. We have volume absorption. All those sell orders were absorbed. And well, guess what? The buyers came in and smacked all those sellers out of the market because we broke above that level. So seeing the volume absorption, seeing the fundamental narrative, seeing the confirmation of the reaccumulation gave me that confidence that buyers are in this market. So all I did now was just measure out my manipulation and wait for price to come into discount. So all I did was set my alert and then walked away. So again, this alert went off on Monday, so around New York time. When this happened, all I did was just, like I said, change the alert. So at this point, my alert still hasn't triggered, just basically waiting at this point. So it was around here when my alert first got triggered. So what I wanted to do is drop down and to see, am I seeing any changes of character? Am I seeing any buy orders start to come in the market? And what we can see here is our first change of character. Now, not a change of character how these uninformed traders teach you. All a change of character means is a market is entering a trading range. That is it. So we have our initial change of character because our phase A of our accumulation forms, we have that selling climax, into automatic reaction, secondary test, and small up price action. So from there, this showed me that we was in phase A of our accumulation. So all I needed to do now was see phase B. And what I liked as well was how we're starting to see these micro accumulations on the lower time frame as well, which just gave me a little bit of extra confirmation that we are seeing buy orders come in. So at this point, right, we wasn't even in my trading window anyway. It was coming to Monday around 10 p.m. UK time, which is just before Asia. So I know for me, right, I'm not going to trade it this time. So just had to be patient and really just wait for the market to actually come up. For those in my community, we did call this trade live on stream as well. So everyone who was on the call did manage to take this position as well, which went for a nice 1 to 12. And if you want access to that community and trade alongside me, then what you can do is message me on my Instagram or click one of the links in the bio, and what we'll be able to do is get you access to, obviously, the community. Now, from there, this is what validated my accumulation, right? So again, for me, when I look at an accumulation, I don't just validate it by saying, oh, does it look like a photo? There's a lot of other principles I'll use. But for me, this schematic here met all of those criteria. So from here, what I wanted to do was basically place a limit order of this 50 and 80%. However, what happened was, later in the day, we end up confirming signs of reaccumulation, so my limit order never got triggered. So here, right, what happened was, I originally had a limit order on this 50. So what happened was, my alert from the high up here ended up triggering. Every time I look for set a limit order, I always set 2 alerts. I always set one at my area to show me price has gone in, and another one at this high. Because even if price did come to trigger me off that, right, once price creates a new high, I'm going to have to reduce my risk and move my stop loss anyway. So I always want to be notified in those areas. So once price come up and broke this high here, not triggering here, what I did was I deleted those orders, and I now had a confirmation of a reaccumulation. But from there, right, limit order was set. Now for me, I only set a limit order of this 80% here, and it was just a case of waiting. Now again, understanding things like time and price, London gave the higher low of the day. We're coming into New York session, so we're anticipating a continuation. Apart from here, right, I did have an alert on this high as well, so I can go in and reduce my risk. So obviously at this point, price fills us. At this point, there's really nothing else I was doing because my alert hadn't triggered. From there, bang, my alert triggers. And what I'm doing now is reducing my risk and my stop loss. So let's say, for example, just hypotheticals. Let's say we're risking $1,000 in a position like this. What I would now do is move my stop loss from the initial point of $1,000 risk to just below the wick that triggered me in. So now at a 4.2 pip stop loss, we've reduced our risk from 4.2 pips to only 1.6 pips. So now that $1,000 risk may only be $200. So now what I can actually do is I can look to take some profits and reduce my risk on the trade so I'm at break even. Now notice I'm not putting my stop loss at break even, but what I'm going to do is pay myself the risk that's open on this trade. So for example, if it was $1,000 original risk at 4.2 pip stop loss, and now the stop loss is 1 pip, let's just say, I'm going to close at least $250, because if price were to stop me out now, that was what I would lose. And realistically from here, right, all I was doing now is waiting for price to come and hit my target, which was these highs to the left. Why was that my target? Because obviously I'm looking for my reaccumulation. Now at this point, right, once price hit my target, I then closed 75% of this position, which is around 9R. Now at this point, I was anticipating that we could come higher, right, and could actually potentially come, to fill some of this daily imbalance. But to be honest with you, price ended up actually coming and taking me out of this position. She come back, right? It's actually funny because the news come back, takes me out, and then obviously goes towards the target. But again, I don't really care. This is why I take partial profits, because as long as I banked money on this trade, I made 9R in this position. So I was absolutely happy with that. I don't need every trade to go for a 1 to 100, to go to a 1 to 1 million. It's fine. Right, I have my targets, I partial out, and if there's potential for price to come higher, cool. I would like you to go higher, but that's just anyway money because I already banked what I needed. Now, my next position I took was on silver, and this was a 1R loss. Now, again, as traders, like, we have to understand that a loss is completely natural. Like, when I was new, I'd get really upset and really emotional with a loss. But, I mean, look, don't get me wrong, it can be annoying sometimes. But this is why you have to think correctly, because I'm not thinking about a singular trade. I'm thinking about the next 50, next 100 trades. And I know if I take this trade 100 times, I'm going to win the majority of them. So, again, with this trade, right, the fundamentals gave me my bias at this point. Now we came into a reaccumulation to the left. Right, price comes in, gives a lower time frame accumulation, and showed me confirmation of buyers coming in. Right, and what I liked is that we did break some order flow on this as well, and then we did start to see this distribution pull us back down to demand. And what I liked was that as price was coming into demand, we was seeing evidence of an accumulation down here. Now, again, I can go back in hindsight and I can look for a million reasons to invalidate this trade, but here's the thing. I can't implement that data into my plan until I collect enough data on it. Just because if something happens once doesn't mean you should change your trading plan. Look, we can all look at the setup right now, which I'm going to show you for my buy, and we can always find a million reasons to sell. All right, we can find a million reasons to not take this trade. But the thing is I know it met my plan, so that's the main thing. What I have to do is at the end of my data, go back and review if this is a problem that keeps coming up. And if it is something that keeps happening and the problem keeps occurring again and again and again, okay, cool, I can now start to change something and either add or remove a new principle in my plan, but only until I get to the end of the data. So from there, now I liked how we come into this manipulation from NFP. Now, we did see signs of another micro accumulation over here to the left, which I really liked. And it actually did give an entry down here as well, which was like a 1 to 30 plus reward to these highs, but I didn't take that. It was just a back test. So anyway, once I saw this accumulation over here to the left, right, this gave me confidence that buyers were in control of this market, considering it was in alignment with the fundamentals and the higher time frame. And then once price come into here, well, I actually had a limit like off this 50. Stops like this, right, and I had another limit on the 80 down here as well. So once price actually come down, right, it triggered me into my 50, and obviously we did start to see a micro accumulation in there. So once this limit was triggered, I did end up deleting this other limit as well because of the time of day. You know, I like to only have trades on between 7 a.m. UK time and 7 p.m. UK time. So that old limit was gone. This was filled. At that point, once I saw those micro accumulations during Asia, I did reduce my risk, put my stop loss below this low, and then from there, you know, it seemed like it would look good. I thought, all right, well, price should continue to my next target. I just had my alerts basically set up in this imbalance, and then lo and behold, bang, price ends up, covered and stops me out. Now look, I could have got upset about this trade, but I had to ask myself, did this trade meet my rules? And it did. So what I said to myself was, look, this is just one of my sample sizes, and I always like to think in 20 trades. So it was just one out of 20 trades. I then went to my journal, logged the trade. Of course, I looked to see if there was anything I could have done better, and I did log that data. However, I'm not going to go and change my rules based on one trade. Because if now, what I'll do is when I get to the end of my new sample size, if this is a problem that's happening again and again and again, of course, that's something I can rectify and change. But as traders, you're always going to find a reason why that trade could have lost, and always find another reason. Hindsight is a powerful drug. And of course, don't get me wrong, you know, it was annoying hitting stop loss, but you have to learn to regulate your emotions. You have to calm yourself down and move on. Because if we're always looking for a reason to invalidate a trade, mate, you're going to get stuck down a wormhole and you're never going to come out of it. So the next trade I ended up taking was on USD CAD again, right? Same narrative, same storyline from the fundamentals. And what I just liked here is how it was continuing order flow, right? We came in back to this reaccumulation, and what I saw on the lower time frame was that price was creating a beautiful accumulation down here, right? I can come in, I could validate it, it met all my criteria. And again, this was another loss. And like, here's the thing, you can have the most textbook setups, but they can still lose. But so this is why we have to change our focus, because when I was focusing on outcome, right, I would get chewed up and spat out by the market. I had to accept and realize that I cannot control the outcome. No matter how much hours I put in, no matter what I do, I cannot control the outcome. So once I became at peace with that, I started focusing on the things I could control, which was, and which are, my approach, my rules, my mindset, my emotions, my risk. And once I started to focus on my performance, when I say performance, I mean, am I following my rules and my efficiency? Once I started to focus on that, that's when I started to become better. Because again, it's the same thing, right? You have to have the same approach to the market to get the same outcome. So once I saw, obviously the schematic here, seller's climax, automatic reaction, secondary test, obviously this was a type 2, and we'll obviously have our secondary test in B and our sign of strength. For me, I went in, right? I fibbed out my manipulation. I had a limit off to 50. And for me, like when I count my trades, right, I normally split my risk like this. I mean, sometimes I won't, but sometimes I will. But I'll use 1 unit of risk with 2 entries. So even if one of these trades hit stop loss, I'm not going to count that as 2 losses because I'm counting it as 1 trade I did. I don't really care about like win rate and wins and losses. For me, care about my equity curve growing at the end of the week and at the end of the month. So for me, I mean, again, the risk reward was beautiful on this. To the highs, I was looking at a 1 to 34 and a 1 to 22. And then from there, all right, my limit was set. I was just waiting for her to come and fill me. And guess what? Bang. Ends up stopping me out. Yeah, the master of coin took 2 back-to-back losses and bang, goes to my target. Now, here's the thing. Yeah, look, yes, maybe I was a little bit annoyed. And it's normal, right? We're humans. We're going to get annoyed. But it's not the emotion that's the problem. It's our response and reaction to the emotion. Because what I would do before is I'd look like, for example, after this trade, I'd go back and revenge trade. I'd go and try and make that back. I'd be like, fuck, I got it right. I'm a good trader. I'd go back and try and force it. But now what I learned is that anytime I feel some sort of emotion, it clouds my judgment. It affects my perception. I'm more likely to make mistakes. So what I do now is anytime I feel some sort of emotion, whether it's confidence, and that's another thing, right? Even after a win, when I get too confident, I have to put myself back. If I take a loss and get annoyed, I have to put myself back and always bring myself to that neutral standpoint and regulate my emotions. And then once I do, and I'm not feeling any emotions, I'm nice and present, I can go back and resume trading. Because when I look at my journal, my data tells me if I've had a big loss or something like this happens and I know I get annoyed, normally I will go to it and I'll start taking loads of trades and revenge trade. So because I was journaling, because I was tracking my emotions and tracking my data, that allowed me to now have the awareness where I am today to say, wait a minute, I'm feeling an emotion. Let me close my computer and come back another day. And now it can be hard to do that. I know it can be very hard to walk away from the market sometimes. But this is where we have to enter that abundant mindset, right? We've got scarcity or abundance. Scarcity where, oh my God, I need this trade. There's never going to be a position. Or abundance. Do I really need this trade? My bills are paid. And that's another thing, right? Some of us, that's a whole nother convo for another day, right? Emergency fund. I know my bills are paid for the next 6 months, next 1 year without even needing to trade. So as long as I've got that cushion to fall back on, I don't need to place another trade. And yeah, now again, right, I can go back and I can look at a million reasons to invalidate this trade, but I only need to do that if it broke my rules. It didn't break my rules. This met my plan. I can literally show you so many trades that I took at the exact same setup that wins. But it's not about the outcome. It's about, like we said, it's all about the performance and are we sticking to that plan. So my next trade was actually based off the CPI data in the US. And as you know, again, this was all called in my stream as well for my community. But we did say, look, if we have an uptick in inflation, we will be looking to be selling US indices. So when we saw that uptick in inflation and obviously saw that the market, all right, let's obviously do our analysis. We obviously saw that we had a reaccumulation over here. We can obviously see we've got a nice distribution up here. I like how, what do we have? Cause and effect. Our distribution invalidated this reaccumulation here. And obviously the fundamentals was telling us to sell by understanding the inflation and where we are with the economic cycle. So once I knew that and I had the fundamental line up with a fundamental narrative and the technicals line up, it was go time. Now, I only trade indices after New York Stock Exchange open, which is 2:30 p.m. UK time, because typically we'll get a manipulation at the open. So at this point, right, we are trading on Thursday, right? I've obviously had my break of order flow. I'm looking at this manipulation candle. I had one limit off this 50. I had one limit off this 80 over here. And my stops were above the highs as well. So I had 2 orders set. Now, my next target was obviously first target was going to be this low. My next target was going to be basically this devil's advocate, right, the 80% of this down here for a nice 1 to 20 and a 1 to 32. And then from there, I wanted to see, can we actually make it and create a new low from there at that point, which has been an absolutely insane risk reward. But again, I'm going to give you guys the truth and what happened. So from here, again, I can't set my limit till 2:30 p.m. UK time, so I had to wait. All right, so we're getting there now. All right, it's 2:22. And now it is almost 2:30. Bang, 2:30 p.m. UK time. Now, at this point, right, alerts, I'm doing two things. Right, I've got an alert here and I'm waiting because my limit's set. I've triggered my 2 limit orders and there's nothing else for me to do. I'm not going to be sitting here looking at the market and watching every tick and trying to delete my limit, trying to change it. No, make a decision and follow through with it. So at this point, right, price ends up triggering me off to 50. Now, one thing I must say as well is that when it comes to me setting limits like this, I always base my limits off my broker's data feed, because you can see here on TradingView, it technically misses it by like a few pipettes, but on my broker, bang, slapped right in and got the fill. So again, I always set my limits off of my main broker on MetaTrader. And again, at this point here, I didn't even know if I was filled or not because I'm not looking at the chart. Right, I'm waiting for my alert to go off. Bang. Once my alert goes off, right, first thing order of business was reducing my risk. Moving my stop loss from this high to just above this high here. Second order of business was deleting this limit. Now at this point here, I was already trading at a 1 to 10 risk to reward. And for me with indices, right, I like to be in and out, I like to be quick. So I secured half of my trade at this point. Now, the reason I only secured half and I didn't secure any more is because, like we said, we had that potential in the higher time frame for price to go lower. Now, from there, right, my next target was, like we said, the 80% of this reaccumulation. And that was where I wanted to secure another 25% of the order. And then from there, I was obviously looking for those lows to the left to be hit. So from there, I was just waiting, right? Again, had my alert set. And here we go, almost there. Bang, comes to the 80%. Now at this point, right, obviously I secured another 25% of the order and I had 25% left open. So at this point I was waiting for the low, for a new low to get hit. And to be honest with you, it got a little bit late in Thailand and I did end up sleeping. However, I did notice on a back test, I could have actually ended up getting in for a hedge buy down here. But I ended up missing that. Now, obviously, missing that hedge buy, you know, would I have been a bit annoyed? Yeah, a little bit. But truth be told, I can't let that affect my decisions. I said to myself, look, I'm tired. I've banked profit for today. I don't need to be trading. So I was at peace with that decision because I always like to think of the opposite. What if I didn't become at peace with that decision? What if I went back to the charts now and was trying to catch that buy? And if that buy lost, would I have kicked myself? Would I have been annoyed if I would have took that buy and it lost? Well, truth be told, probably not, because I already made profit on that position. But like, when you miss trades, ask yourself, even though you've seen this position, was it something that you would have taken or could have taken? You know, if I've just made profits from the market, all right, and I'm going to sleep, I ain't going to stay up. This doesn't make any sense. What's the whole purpose of trading? Doing what you want when you want. I wanted to sleep. I made profit that day, so I slept. For me, even though I missed the trade, guess what? I'm okay with that decision because I know that there's always another day and there's always another trade to catch. As long as you can identify that setup, hey, good, you're a good analyst. If you keep missing those setups in the moment, okay, write it down, log it. If you notice that at a certain time of day you keep missing trades, well, go back and look at your data. And like, that's the thing, guys. I'm a really big advocate about data collection. Like, all the decisions I use in these markets comes from the data I've made. You know, it's like I found the most success with sticking to one strategy and collecting as much data on that strategy as I can, rather than jumping from this, rather than jumping from that. So when we go back to look at this week now, you know, I took a total of 4 positions. We had the USD CAD, we had silver, we had USD CAD again, and then we had obviously SPX. I ended up losing 2 of those positions, which is okay, and ended up winning 2 of those positions as well. And this is the importance of clear risk management, sticking to a plan, and discipline. You can have the best risk management in the world, but if you can't stick to a plan, you're never going to win. And the best way to do that is, like we said at the start, think in sample sizes. Don't worry about one trade. Always ask yourself, did this trade follow my rules and meet my plan? If it does follow your rules and it does meet your plan, take the trade. Regardless if it lost, regardless of what happened, it doesn't matter. Because as long as you can stick to a set of rules without breaking that plan, in the long run, you will become profitable. It's just that if you're getting to the end of your sample size and still losing, well, then at that point, you know there's an error with your trading plan. But if you get to the end of your sample size and say to yourself, fuck, I keep breaking your rules, yo, it doesn't matter about your analytical ability. You have to look at your psychology, or vice versa. If you're getting to the end of the sample size, you're following your rules, but still not winning, well, now you know you've got to work on your technicals a bit better. And that's why I love to let data always drive my decisions. Because truth be told, men can lie, women can lie, but numbers never lie. So if you guys did enjoy this episode of reviewing the trades, showing you guys a bit more of the insight and kind of how I dealt, how I thought about these trades during the week, let me know in the comments, if there's anything else you guys would like to see, anything specific. I know some people are asking about crypto. I know some people want to see more chart work, but whatever you want to see, please, whatever you're struggling with, drop it in the comment section and I will definitely make a video on it. If you are sick and tired of losing and you really want to take your trading to the next level, I have opened up a few more spaces, like I mentioned earlier, within my mentorship and community. Now, if you want access to the mentorship where you can learn directly from myself on a one-to-one basis and really take your trading to the next level because you've got a strategy that's backed by facts and you have someone over your shoulder actually helping you get better, you can send me a message in my Instagram, link is down below, or you can go on my application page and apply on there. Again, guys, I may not accept you. I end up turning away over 75% of applications just because I only want to work with people that, one, I know I can get results, and two, they'll be a great fit and I can help their exact situation. With that being said, guys, don't forget to comment, like, and subscribe, and I'll see you guys all at the top, from the top, because you already know that bottom's way too crowded. Sheesh.